Never has it been more evident than in 2020 that the economy, the stock market and the property market are completely independent of each other. So today I want to talk about how these three markets react and how you can use this information when making investments. 2020 has been a really revealing year. We've seen the economy go into a recession, we've seen the stock market bust and then boom, almost back to its all-time highs, and we've seen the property market react completely differently depending on where you live. So today I want to talk about these three different markets and how they react to news and what you can do with this information when you are looking at investing. So the economy, when looking at the economy, it's important to remember that any economic stats or any impacts on the economy are always backwards looking. So that is the stats that we see come out on the economy is what has happened. So those stats might be on data that's 3 or 4 months old. And the other thing with the economy is reactions don't happen straight away. If someone was to lose their job, their spending habits don't instantly change. They may have a little bit of a savings, and there can be that lag effect when looking at the economy. It really is a backwards looking statistic and market when you are looking at the economy as a whole. Where the stock market is the reverse of this. The stock market is forward looking. People are buying stocks on what may happen to a business. So a great example is at the moment the Flight Centre, your airline stocks. People aren't buying based on the business returns those businesses are seeing today. They're buying based on what they see those businesses happening in 3, 4, 5 years. They've got a long-term view. The same can be said with Tesla or any of your big tech stocks that may not actually be profitable today. People are buying them based on what their future profit predictions are. So that's where you hear people say, buy the rumor, sell the news. So they're buying the rumor of what may happen to that business and then selling once the business actually hits those goals. So that's the stock market. It's forward looking. So that's where we had our big panic sell at the start of the year, and then people bought back into the stock market based on what may happen. They were basing their decisions on the future movements. Where the real estate market isn't really backwards looking and it's not forwards looking. People buy majority of the time out of need. So that is our owner occupiers, which make up the biggest portion of our buyers in the market, aren't necessarily buying on economic grounds. They're buying out of a need, and that's the same with the rental market. People are renting a home out of need, and this is where the property market sits very different to what may happen in a local economy or might happen in the stock market. It is sitting on its own as its own little entity. A great example is the local market that I sell in, and that's Cairns. We're predominantly a tourism market, but what we're seeing at the moment is even though our economy may be struggling a little bit, we've got a really good influx of out-of-town buyers buying properties in Cairns with plans on moving to this market. So even though the economy is struggling, there is that disconnect between the economy and the property market as people are buying as they plan on moving to this area, and that's really helping prices. The other big factor that helps property prices is the market confidence. And the biggest driver of confidence is people missing out. There's nothing that excites me more than when I meet a buyer that's just missed out on 1 or 2 other properties and they've told me that they've put in offers but got outbid or went to buy a property and it was under offer. Those buyers know that the market's moving, they're seeing it firsthand, they're seeing that the market is active, and that creates confidence in those buyers to pay a little bit more for a property than they may have. So that's where market confidence really drives the property market. Now, what can you do with this information? Well, if you're investing in either the stock market or the property market, it's important to know what those markets are. Are they forward facing? Are they basing their decisions on what may happen in the future? Are they backwards looking? Are they looking at past stats? Or is it based on what's currently happening? And by dissecting the market and looking at what's actually happening in your individual markets, you'll have a much clearer picture what you are buying into. And if you're buying into something based on historical evidence or buying something on hope, like a tech stock that you're buying in the hope that that business continues to evolve and those goals are hit. So there you have it, guys, a bit of information on the three different markets that we're seeing. That's the economy, the stock market and the property market. and a little bit of a guide as what to do with that information. I hope you have enjoyed this video, and if you have, make sure you subscribe. We put out heaps of content on this channel and love bringing you new videos.